So here we want to basically tackle market structure. So the first thing you need to do is to open your charts and then you go to a bigger time frame, because we're going to do this from a higher time frame all the way up to a smaller time frame, that is multi-time frame analysis. So this is Euro USD on the monthly time frame. So the first thing you need to do now is to look for one strong candle break, or what we call price difference candle. So the first rule is you look for strong candle break. So in other words, either bullish or bearish engulfings. So the moment you see those, then you have to you notice them, and that is going to be the beginning of where we are going to look for structural break. So let's start down here. So we have from down here, so we can mark this as our low. So this is the low. Then the next candle is not a very strong bullish, but the second, this one is a strong bullish candle. So now this candle has broken above this high, this. So 3 highs. So that is your structure. So you mark it all the way up to here. So that is your structural break. Okay, this is an indication of a bullish momentum. Then let's continue. We have the next candle is also a strong bullish break candle and has broken above this high, but not this one. So you also mark it like that. So the moment you have, then the rest of this, we have a series of consolidating candles all the way up to here. Then let's come to study the next candle here. We have a strong bullish break here, which broke above this high. All right. And then let's go. The next, there was a range, and then we had this strong bullish candle, which broke above this candle, and then this one here. So you also mark it like that. So the moment we've done that, we've marked our strong bullish or bearish engulfings. In this case, we are looking at the bullish one. So the next thing you would want to do is to be able to mark your highs. You want to mark your highs. Mark highs and lows. If you're in a bearish market, you mark lows. If you're in a bullish market, you mark highs. So that's the next thing. So then now this will also mean that you're going to do that when the market has closed or that candle has closed. If it is a monthly candle, it must close. If it is a weekly, a daily, they have to all close. So you mark the high. So the most recent high for this candle was that one. You mark it, and then you also mark the other highs on your left. Remember, we work with the previous history. So the moment you have done that, you have actually started understanding how the trend is going to go. So what that means is that whenever a structural high is broken on the left side, the market is telling you that I want to go further up. And then like this, it wants to go further up. Like this, it wants to go further up. But then now the next thing is, once you can no longer see highs and lows of structural break, that's when you can go to a lower time frame. So you come to the weekly or whatever lower time frame you have. Remember, on the monthly, the price is bullish. But on the weekly, is also bullish, but we are seeing a scenario of a pullback here. So when shall we say the trend is going to change? The trend can only change here if the market comes to break this previous high and then retest it and then closes back inside this. That's when we can say the trend is beginning to change. Otherwise, we're still bullish. This is exactly what has been happening here. So you now realize that this strong break here, this is where the market was indicating that it wants to go further up, and then price could not come back into this. So this strong break also became your support. The same thing here, this strong break, this is where support was formed and market pulled back. So this is exactly what we want to see here. So unless we see a break below this and then closure, we are still bullish. So what could happen actually? Market could come, it could come all the way up to here and then go back up. All right. But so that is what we could see on the weekly. But now we need to understand this candle here, this bearish candle on a lower time frame, and that will be the next, which will be the daily. So on the daily, you would see a totally different scenario because you have fewer candles than the weekly. You have about 5 candles. So let's study this now by again marking our highs and then our lows. Okay, so let's mark our highs and then our lows. Let's come to the left. We mark this as our high because we can all see that this is a high. You just mark it like that. And then we come on the left, this side here. You would also have another high here, which you have to mark. Okay, so once you've marked the highs on the left, let's come to the lows. So you also mark a low. This is a low here. And then you mark another low here. Okay, so once you have done that, you have actually dissected the market. Remember, this is the place where the next support could actually happen. But now you are understanding price. If price is to come back here, it has to form a series of a trend, a counter trend to come here. So once you've done that, now as long as price pulls back into these lows and then breaks back into this low and closes, then it's going to be a bearish trend. The same way this low, if this previous high, which is a low here, is broken and the candle closes below this, it is going to be bearish. So let's come to a lower time frame and understand it. So on the lower time frame, this is how it looks like. So let me just show you one small concept here. This is the live market, and we're trying to understand the trend on the live market. So on this live market here, what we want to see is if market breaks this, closes here, and then retests this, and then breaks inside this, then that's when we say the trend is going to be bearish. It's going to continue to be bearish. Trend, a bearish continuation. So there must be a break, a strong bearish break, pull back, and then closes into this twice. Then you can know that the market is going to be bearish. And let me just illustrate this to you using this. So we had these previous highs. So let me just remove these things. So this was our monthly high, but we had a high here on the left. So this is the scenario. So you have a high here, so you just mark it. This is what I was explaining. So from here, the market came and closed here with a strong bearish candle, this candle here, and then it consolidated, broke. There was a breakout. And then this is where people get trapped. They will think now the market is going to change to go back up. But then if you are patient enough, you wait for another break closure inside. So this break closure inside is an indication that the trend is now going to have to continue to be bearish. This one here. This is, so now if you don't want to get trapped here, if there is a high above you, the only time in which you can confirm that this trend was going to be bullish if it had broken here, retested this, and then continued. But here we had a high, and then there was a break inside. So, and then you have another low here, which it has also broken, and the market continued, and then tried to pull back, but then failed, broke this low. So the moment it broke this low again with a bearish candle, that's when we knew the trend is going to continue to be. So the easiest way for you to understand market structure is just mark your previous highs and lows on the left, and then have your picture of a higher time frame. So that is one of the easiest way to understand market structure.